Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are. It's Friday, and you and I are doing the interview, and it works. It's always interesting, particularly with these incredible financial markets.
We have a listener question. He writes, I've been a long-time subscriber, and we are finally able to watch your teachings unfold before our eyes, specifically that of the reserve currency gaining strength in a post-bubble contraction. My question is, how long does the U.S. dollar retain its strength before it finally gives in to the effects of years of central bank and Treasury Department abuse?
Yeah, thanks. Good question. The dollar last year in the first half of the year did build a base, the DX, at just below the 90 level, and then it rose above the 20-week exponential moving average, which then concluded the base. And then at 93 it broke out, and then recently under financial panic it got to 99. So the main thing is it was doing what it should be doing. Now, in following previous great financial bubbles, the senior currency, now the dollar, used to be sterling, and the line long against most currencies and most commodities for most of the time. And in a post-bubble contraction, which some of them have lasted around 20 years, the usual business cycle, 3 to 4 year business cycle comes and goes. So prices and purchasing the dollar, power of the dollar go up and down, that on a nearer term swings. But the final part of the question is really appropriate. And how long does the U.S. dollar retain the strength before it finally gives in to the effects of years of central bank and Treasury Department abuse? Now, you're quite right on that. Central bank abuse. But all of that virtually all of the central bank abuse is in the market. And this is where the street needs to do a little more research, is that the common understanding is that the Fed is evil. I agree, because it's practicing theories that have never worked. And the main thing is that they push out credit thinking that it'll directly drive the economy, but that's correlation and causation problems. In formal logic, it's called a primitive syllogism. So anyways, but while the Fed does only one thing, which is always providing excessive credit, the public chooses what it's going to speculate in. And in 1 decade, it'll be in commodities, tangible assets. And that ran with 2 huge peaks in 2008 and 2011. And then financial history shows that about a decade later, you can have a great financial bubble where the inflation is in financial assets, stocks and bonds. So here we are. You look past over the last decade, and the Fed has, for most of it, been very worried that inflation wasn't high enough. And they kept insisting that it had to be at 2%, not understanding that the world was in a financial bubble, and the extra credit forced into the markets would end up in stocks and bonds, not in the driving the economy directly as they believe. So all of this abuse is in the market, and it is exaggerated the speculation that you would get in a great financial bubble. And the irony, I love it, it's just absolutely incredible, where the Fed for most of the last decade was doing exactly what it did during the 1920s, when in the 1920s you had, well, the big commodity boom then drove the U.S. CPI inflation to plus 24% in 1920. In 1921, everything crashed, and the CPI fell to minus 16%. So the Fed was very concerned about prices falling or being too weak. So they were deliberately easy, not understanding that the world was in a financial mania. And then it didn't create the bubble, but it added to the speculative furies. And then, of course, you know all about the 1929 crash and then the Great Depression. So here we are.
We'll have more with Bob Hoye right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bought a story with nickel, some Chinese tycoon trying to short, what, $6 billion, $8 billion worth of nickel?
It's immense.
And the fallout continues. What's going on?
Yeah, well, you had brutal limit up days, and it was enough to distort bank. The fallout will impair some members of the London Metal Exchange. This is what happened in 1985 when the tin market was sort of dominated by a number of countries that was called the Tin Council. You might call it the Tin Cartel, and they squeezed the shorts. It went crazy, and then the whole violence then did harm. Some metal brokers did fail on that one. So this one here, now you've a limit move for nickel at these prices is 8% down, and so it is one of those things when you get a commodity going and limit moves up, the longs are making money, and the shorts are getting ruined, and then the transition over to the other way often is so fast that the longs can't get out and get short, and then by then the shorts are destroyed. So they're incredible things, and I wish the London Metal Exchange well with this one. And the key focus was on nickel, and we'll watch and see how it all resolves.
Headline: China house prices slip lower despite policy loosening.
Yeah, that was interesting. That it looks like the central bank over there may be saying they want to ease, and but you've got market forces, and what is it? Around 150 million apartment units or condo units are empty in China.
Something like that, yeah.
Yeah. That also is going to be fascinating to watch. Yeah.
Headline: Panic selling grips Chinese stocks in biggest plunge since 2008.
Yeah, the one on this is the 2008. Because 2007 saw the peak of a terrific cyclical bull market, and which reached its top for the S&P in the middle of October. And then in December, it was determined that was when that recession started. So the instruction being in these days is that when the stock market rolls over, so let's back up a bit, Jim. When a great financial bubble ends and heads down, the stock market goes down with it as well. So there was a study here recently by one of the big firms, and some of the tools they're using I don't use, but it looks like the economy could suddenly be weakening. So, but well, let's give it a little more time on that. But it'll be interesting to see if indeed the high for the stock market was set in early January, and the hit so far has been very much news related with the problems of Russia invading Ukraine, and so we'll just see. And my guess, Jim, is that because it has been such a huge financial bubble, and the financial side activities take up so much of a proportion of the economy, so that explains that when the stocks head south, it takes the economy with it. Whereas in a normal bull and bear market cycle, the stock market will peak and the economy will keep going up. The lead is typically 10 to 12 months. And this is why even today's semi-official list of leading indicators included in it is the S&P. But it doesn't work at the end of a financial bubble, is because both the economy and the financial markets head south at the same time. So, again, this is fascinating to watch.
Russia is spiraling towards a $150 billion default nightmare.
Yeah, Jim, we've been talking about that one. That's where I think it was March 3rd when the two major credit rating agencies, Fitch and Moody's, downgraded Russian sovereign debt by 6 notches, right down to junk. So this then leaves many fund managers that were buying what they thought was an investment grade bond, and if they got rules that they can't own investment below investment grade, they're in trouble. They got to get out of them one way or another. So again, this is an example of the end of speculation, and the hit to Russia, I think, is probably forcing a recession there. That I would call joining the post-bubble contraction. And on that one, we want to be clear, because it was a year ago in March when Turkey and Argentina announced that their central banks had lost liquidity. They were in a financial crisis, so short rates went up and their currencies got hit. And then since June, the giant economy China has joined the post-bubble contraction, and this is where I think now that Russia has joined. And anyways, any of these post-bubble contractions in previous great examples, the problems have started in outlying countries and then eventually hit the financial centers, and that would be New York and London, and here we go. Who knows when? But the issues are immense, absolutely immense.
Stock buybacks are on course for another record.
Oh, yeah. You know how I hate companies that do stock buybacks, because and this gets into their Treasury Department, financial officers, and right up to the board level, and they dedicate too much of their time and money to manipulating their own stock, and again, largely driven by board members having stock options. So if they decide that the stock is too cheap, they then start the buybacks. And I'm going to mention Boeing again, because it was just such an atrocious example whereby they spent something like $45 billion in doing stock buybacks and scrimped on the engineering for the design of the 737 MAX airliner. They had 2 disastrous crashes with that. So here's the issue. They spent $45 billion buying their stock, which is financial manipulation, financial promotion, financial engineering, whatever you want to call it, and scrimped on real engineering. It's just so disgusting. every chance I get, I'll bring it up, and here we are, right? Even though the stock markets have been very uncertain through February and March, they're still at it, buying stocks back. So, and setting up for another record. So, yeah, it's crazy.
Bob, thank you so much for chatting with us.
Yeah, Jim, good to be with you, and we're looking forward to getting together next week.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.